હેલો ફ્રેન્ડ્સ, જય સ્વામિનારાયણ. સંદીપ પંડ્યા કોમર્સ ક્લાસમાંથી હું છું આનંદ સોની. We shall today discuss one of the important topic for class 12th commerce students, that is investing activity under the cash flow statement. Fine. So before starting our topic, we need to understand a very important concept about out of the 5 total item of balance sheet, which item is a part of investing activity. So the table whatever I drawn is a balance sheet. So let me write first of all. As we know, this balance sheet of company contains basically 5 separate portions, which is shareholders fund, non-current liability, current liability, non-current assets and current assets. As we know, dear friends, none of the items remain to be returns except these 5 heads. All items are included in these 5 heads. So what we should remember first of all, these shareholder funds and non-current liability both are part of financing activity, dear friends. And these current liability and current assets both are part of operating activity. But you will definitely tell us, sir, don't you forgetting something? No, ruko zara, sabra karo. Let me write here. These current liability except the bank overdraft. Come on, except what? Bank overdraft are part of operating activity. But sir, what about these non-current assets? These non-current assets are actually today's topic, that is investing activity. So once again, what we should remember, total 5 items: shareholders fund, non-current liability, current liability, non-current assets and current assets. So out of total 5 items, these non-current assets are a part of investing activity. That means once you identify this item is a assets and a non-current assets, then you should include in investing activity. So sir, what we should take into consideration while solving the questions of investing activity? Keep 2 things in your mind. Just ask the one question: cash comes in or goes out? Suppose cash comes in due to the any transactions of investing activity, that is your cash inflow. But if you encounter there are a certain transaction which results into the cash outflow, so obviously it is a cash outflow from investing activity. Fine. So let me show you one by one calculation for very important questions. From the following information of Nirali Company Limited, determine the cash flow from investing activity. Dear friends, whenever you have been asked such kind of question, do not forget to prepare a table for machine account. Fine. So let me show you the calculations where we shall prepare first of all machine account. As we know, machine account has debit side and machine account has credit side. So what we have been given, opening balance of machine account, that is rupees 4,50,000. As we know, machine is assets for us and assets account always shows debit balance. Hence, any opening balance of assets will be written on debit side. Hence, we shall write to balance brought down. That will be 4,50,000. So obviously we know closing balance of machine account will be written on credit side. So just for the sake of calculation, let me write here by balance carry forward. That will be rupees 4 lakhs. So let me clarify over here. If we have been not given these 3 additional information, so can you make a sense? What does this indicate? In the beginning of the year, we have the machines of 4,50,000 and we have been the machines of 4 lakh at the end. So the difference, we can definitely identify that the value of machine reduced over a period of 1 year. So this could be our depreciation, or it can also be said that we have sold out the machine of value of rupees 50,000. Fine. But we have been clearly given some information here. The depreciation on machine is of rupees 50,000. So we know from 11th standard, due to depreciation, value of machine reduces. So on credit side, we shall write by depreciation account. That is rupees 50,000. One more information is given. Book value of machine sold during the year, that is 25,000. whereas selling price is 15,000. So what we can say here, book value which was 25,000, which is sold at a price of 15. So difference 10,000, that is nothing but a loss for us. So these 10,000 rupees we sell right on a credit side by profit and loss account, that is 10,000. So sir, how can we say this one? See, let me show you the journal entry for this one. Whenever we sell the machine, as we know, when we sell the machine, we receive the cash. So by bank account, or bank account will be debited. How much amount we are receiving? As we know, 15,000. What loss we have incurred? That is 10,000. So we shall write profit and loss account or loss on sale of machine. That is 10,000. 2. Machine account. That is rupees 25,000. Now let it post. So machine account credit side, we shall write bank as well as profit and loss both. So let me show you again, profit and loss 10,000, and we shall write whatever cash we have received, that is by bank account, that is rupees 15,000. Is it clear? Now, are we given any additional information? No. So without further delay, just make the total. So sir, how can we make the total? Let's see, 4 lakh plus 50,000, 4 lakh 50, 4 lakh 60, 4 lakh 70 and 4 lakh 75,000. So 4 lakh 75,000, if we put it on a debit side and if we find the difference, that will be 25,000. So keep in your mind, any balancing figures on a debit side will be either, number one, either the purchase or a profit on sale of machines or any assets. We have been directly given this loss. So obviously there can never be a profit because both profit, loss and profit not exist at a time. So this value will be obviously our balancing figure where we shall write to bank account. And these indicate our purchase of machine. And these indicate the sale of machine. Fine. So sir, what is the fun after preparing this one? See, once you have written total 6 items in machine account, just keep your focus on only and only 2 items if you are solving the question related to investing activity. What? Number 1, that is how much cash comes in and how much cash goes out. Fine. And by keeping in your mind these 2 things, just prepare a statement little bit where you should write cash flow from investing activity, where we shall write one by one sale of machine, that cash comes in. At what price we are selling? 15,000. So we shall write 15,000. What amount of machine are we buying? That is 25,000. So we shall write purchase of machine, that is 25,000. So whatever cash comes in, we shall show as a positive value, and whatever cash goes out, that we shall show as a negative value. So obviously we shall make a total that is negative 10,000. So these 10,000 indicate that we have used additional rupees for investing activity. So finally we shall write here cash used in investing activity. Is it clear, dear friends? So hope you understood it properly. So my humble request to you, pause the video, solve at your own, then see the solution where you will find a lot more clarification regarding this question. Fine. So let's move to the next one. Now read the question carefully where we have been given few more details. About Bridgemont Limited prepared the cash flow statement for the investing activity, where we have been given investment, machine, land and building, furniture, patent and goodwill. And additional information is also given where we have been written 20% depreciation on machine account. So where is machine account? Sir, here. So we shall write first of all number 1. Provide 10% depreciation on furniture. So we shall tick mark the furniture where we shall write number 2. Investment in the beginning of the year, 40% investment sold at rupees 3 lakhs. So we shall tick mark the investment where we shall write number 3. and interest received on investment, that is 60,000, which is a separate item. So sir, what we first of all do here, whenever we have been given any additional information over and above this table, we keep in your mind, prepare the table for all these items. So first of all, we shall prepare table one by one for investment account. So let me show you where I am preparing table for investment account. So investment account, where we shall write opening value and closing value. As we can read 31st March 2016 and 31st March 2017. So this 31st March 2016 is the opening value, and as we know, investment is also our assets, non-current assets will be always shows the debit balance, and so on the debit side we shall write to balance brought down. So what is the opening value? That is rupees 4 lakhs. What is the closing value? 6 lakhs. So we shall write here by balance carry forward, that is rupees 6 lakhs. Fine. Suppose if we have been not given this information, that 20%, or we can say in the beginning of the year 40% of investment are sold. So this indicate that during the year, in the beginning of the year, we have the investment of only 4 lakhs, but at the end it becomes 6 lakhs. So by 2 lakhs our value of investment increase. So these 2 lakh indicate inflow or outflow? Obviously outflow, because in order to buy additional investment, or in order to make an additional investment, we need to pay more value. So cash goes out. But here we have been given in the beginning of the year 40% of investment are sold. So what was the value in the beginning? That is 4 lakhs. So let me show you the calculation. So 4 lakhs into 40%. So is it a 40%? So it is, yes, 40%. So which will be of rupees 1,60,000. So investment worth rupees 1,60,000 was sold for 3 lakhs. So we know this is the book value, and we have sold at a price of 3 lakhs. So can you make a sense? What does it indicate? Selling price. This indicate during the year we have earned additional profit of rupees 1,40,000. Is it clear? So what journal entry should we pass here? As we know, cash comes in or goes out? Cash comes in. So we shall write bank account debit. How much cash comes in? That is 3 lakhs. What goes out from us? That is investment. Hence we shall credit to investment account. What value of investment goes out? 1,60,000. So 1,60,000 and additional profit, that we shall write to profit and loss account, that is 1,40,000. But the question is, sir, how we should write or post this in our table? So as I told you, bank account debit, we suppose we are not required to prepare any bank account, but we are preparing investment account. So investment account credit side we shall write by bank account, that is rupees 3 lakhs. Sir, are we receiving 3 lakhs? Obviously yes, but out of these 3 lakhs we have earned profit 1,40,000. So in earlier question, as I showed you, what we should write loss on a credit side, but whenever we are incurring or earning profit, we shall write this profit on a debit side. So to profit and loss account, that is rupees 1,40,000. Is it clear? So sir, what is the logic that we are debiting this profit? See, usually we need to pass these two entries. How can we pass? Bank account debit 3 lakhs to investment account 3 lakhs. That we can write by the bank account 3 lakhs. But what about the 1,40,000? So for this purpose, we need to reduce the investment. So second journal entry we shall pass investment account debit to profit and loss account. Hence we have debited profit and loss account on the debit side. So after preparing this one, we shall make the total. So let me show you the total. 3 lakhs plus 6 lakhs, that is 9 lakhs. So 9 lakhs minus 4 lakhs, that is 5 lakhs. 5 lakhs minus 1,40,000, that is 3,60,000. So these 3,60,000, as I told you, debit side there are possibility only 3 items. Number 1, opening balance. Number 2, bank, that is our purchase, and number 3, profit. So out of 3 items we have already given the 2 items, so obviously this will be our purchase. Hence we shall write to bank account. That is, we have purchased or invested amount in some avenue. Fine, and this indicate sale of investment. So as I told you, after preparing the table, what we should keep in our mind? Only two things: how much cash comes in, how much cash goes out. As we can see from investment, 3 lakhs cash comes in and 3,60,000 cash goes out. That I will show you later on. So let's move to the next one. That is machine account. Are we given any additional information for machine? Yes. So let me prepare the machine account. So here it is a machine account where we shall write debit balance and credit balance. So one by one, as we know, machine account has opening balance of rupees 2 lakhs. So machine is our assets account always shows opening balance will be written on debit side. So we shall write to balance brought down, which is 2 lakhs. And closing value, that is 4 lakh, which we shall write on credit side. So we shall write by balance carry forward, which is 4 lakhs. So sir, what information we have been given? Provide 10% depreciation, 20% depreciation on furniture. So as we know, due to depreciation, value of machine reduces. Hence, what journal entry we usually pass in a 11th standard? Depreciation to machine. So in journal entry, we have credited machine account. Hence on machine account credit side, we shall write by depreciation account. 20% of opening value, that is 2 lakhs, which is 40,000. So once we make the total, that is 4,40,000. So 4,40,000 minus 2 lakhs, that is obviously 2,40,000. So as I told you, if no information is given, then this is not a profit, this is not a loss. Obviously, this is the purchase that we shall debit to bank account. So this is our balancing figure and indicate purchase of machine. Fine. So once again, as I told you earlier, focus on how much cash comes in, how much cash goes out. In the same way from machine account, how much cash comes in? Nothing, because during the year we have not sold the machine. Rather, we have purchased the machine for 2,40,000. That is our negative flow, which indicate cash outflow. Are we given any additional information about the furniture? Yes. That is, provide 10% depreciation on furniture. So same way we shall prepare furniture account. Where we shall write debit side to balance brought down, which is of rupees 80,000. And closing value, that is given by balance carry forward, that is rupees 1 lakh. Fine. So what does it indicate here? During the year, we are supposed to provide 10% depreciation. So as we know, due to depreciation, value of any assets decreases. So by depreciation account at 10% value, 10% means 80,000. So 10% of 80,000 will be 8,000. So if we make the total, which is 1,08,000, 1,08,000, 1,08,000 minus 80,000, that is 28,000. And as I told you, keep in your mind, there are only 3 items on debit side. Number 1, which is opening balance. Number 2, profit on sale of assets. And number 3, any amount spent for purchase of assets. So we have not given any information about the purchase or sales. So obviously balancing figure will be our purchase. So we shall write to bank account. This is also our cash outflow. So sir, what is final conclusion by preparing 3 tables? Keep in your mind few things. Number 1, from investment we are receiving 3 lakhs. From furniture we are making a payment of 2,40,000. Sorry, from machine 2,40,000, and for furniture we are making a payment of 28,000. And the same way for investment we are purchasing investment of 3,60,000. So by combining all items we can prepare cash flow from investing activity. So one by one, let's start. First of all, for investment, and always write the positive flow, that is cash comes in. So as I told you, we are selling the investment. So first of all, we shall write sale of investment. What value of investment? That is 3 lakhs. Is there any inflow? So let me just show you. No, this is inflow, this is outflow, this is outflow, and this is also outflow. From any additional information, yes, we have been given interest received on investment. So whatever interest we are receiving, that is our income. Hence we shall write interest received, that is rupees 60,000. And one by one, do not forget to write whatever cash goes out, that is cash outflow. From investment, we can say that we have spent 3,60,000 for additional investment. So we shall write purchase of investment, that is rupees 3,60,000 in a negative. We can write in a bracket. The same way machine account, what we have purchased, so purchase of machine, that is rupees 2,40,000. Fine. And finally we shall write furniture, that is purchase of furniture, that is rupees 28,000. So by making the final total addition and subtraction, whatever value we received, if we have received the positive value, that is cash flow from investing activity, and if the total is negative, then we can say that it is cash used in investing activity. Hope this value help you a lot for solving the question related to investing activity. See you in next video with financing activity. Have a good day. Jai Swaminarayan.